Verizon Communications is currently trading at a stock price near its 10-year low. So is this a good time to pick up this company? We will try to answer that using 5 different intrinsic valuation models. So stay tuned until the end of the video to get the answer to whether this stock is currently trading at a discount. The stock screener and intrinsic valuation tool used in this analysis is available at my Patreon page, and you can find the link to that page in the description below. To take a closer look at Verizon Communications, we'll use this stock screener. And here we have the option to write in the ticker symbol for Verizon Communications, and the spreadsheet will then load in the data. We can see that the stock is currently trading close to $42. And if we look at the chart over here, we can see that this year the stock has just fallen in price and is currently trading at its lowest price the last year. The 1-year performance is down 23.40%, and the current year-to-date performance is down almost 20%. But what if we go further back? Let's, for the fun of it, go 10 years back in time and look at the performance in this time span. And we can see with the recent drop in the stock price, Verizon Communications is actually right now trading at the lowest value it has been the last 10 years. So if we look at the analyst target price, we can see that it's close to $52, which is around $10 above the current stock price. If we take a look at the beta value, we can see that it's really low. It is 0.34, and therefore this stock is less volatile than the general stock market. And if we look at the RSI, it is over 30, but close to 30, and normally 30 indicates that the stock could be oversold. It has a low price to sales and price to book, and also a low PE value. Many investors might buy this stock due to its high dividend, and the dividend payout is currently $2.61 a year, which corresponds to a dividend yield of 6.25%, which is really high, and the payout ratio is just above 50%. To analyze if this stock is currently trading at a discount, we will use 5 different intrinsic valuation models. And if you watch to the end, you will get an answer if this stock is currently trading at a discount according to the intrinsic value. But before we go to the intrinsic analysis, just a short disclaimer. I'm not a financial advisor, and the following content is only for educational purposes and should not be considered as financial advice. The first model we will use is Graham's valuation, invented by Benjamin Graham. On the left side we have his original valuation, and on the right side we have a revised version of his valuation model. The difference is that the one on the right side is less aggressive, as it uses 7 for a PE of a company with no growth instead of 8.5, and to that is added 1 times the company's growth rate projection instead of 2 times. This spreadsheet is almost fully automated. All we have to do is to find the growth rate projection of the company. And I've looked into this, and on Yahoo Finance, the analysts expect a growth rate of 3.35% over the next years. So I've added that to the model. And by doing so, we get an intrinsic value of Graham's valuation close to $80. And if we look at the revised version, we get an intrinsic value of $54.13. Normally I will probably use Graham's original valuation for a company with such a low growth rate. However, in the current situation we have, it's better to be a bit cautious, and therefore I will choose to use Graham's revised valuation model. And by doing so, the intrinsic value we got of $54 is almost 30% over the current stock price. And by applying a margin of safety of 25%, we get an acceptable buy price of $40.59. The next intrinsic valuation model is the comparable company analysis model, also called the multiples valuation model. And here we find companies that are similar to Verizon Communications, and I have added 6 of such companies here. And then we find the PE value of each company, and then the average PE, which is multiplied by the earnings per share for Verizon Communications. And that gives us an intrinsic value of $53.62, which is way above the current stock value. If we then add our margin of safety of 25%, we get an acceptable buy price for Verizon Communications of $40.22. The next intrinsic valuation model is Peter Lynchs dividend adjusted fair value. And here we find Peter Lynchs fair value by taking the earnings growth rate, add the dividend yield, and divide by the price to earnings. And again, this spreadsheet is fully automated, so it automatically calculates Peter Lynchs fair value. And we can here see that we get a fair value of 1.16. If we compare it to a table over here, we will see that a Peter Lynchs fair value that is 1 can be interpreted as a fairly valued stock. So when we have a value of 1.16, it is close to fairly valued, but on the side of undervalued. By using Peter Lynchs assumptions that a fairly valued company equals 1, and that a fair PE value equals the company's growth rate, then we can rewrite this equation. And when we do that, we get a fair stock price of $47.81, and by applying our margin of safety of 25%, we get an acceptable buy price of $35.86, which is below the current stock price. The next model is the dividend discount model, and here we find a stock's fair value by taking the next year's expected dividend and divide it by the discount rate minus the growth rate. And if we look at Verizon Communications, it has increased its dividends for 16 consecutive years. And here I've added the quarterly dividend payout for Verizon for the last 6 years. As you can see, the payout interval is currently set to quarterly, but if you had a stock that only paid out dividend once a year, you can set it to yearly. The spreadsheet will then calculate the growth rate and the average growth rate, which sits at 2%. This average growth rate can then be used to calculate next year's expected dividend, and here we get a dividend of $2.66. And by having a discount rate of 8.5%, we can calculate a fair value of $41.05. And by adding a margin of safety of 25%, we get an acceptable buy price of $30.79. Our final intrinsic valuation model is the discounted cash flow model. And here I've added the cash flows from 2011 and up to 2021. The spreadsheet has then calculated the growth rate each year, and that gives us an average growth rate of 21.62%. However, I think going forward this is too high, and therefore I've added a much more conservative custom growth rate of 8%. I've then added a discount rate of 8.5% and a perpetual growth rate of 2%. These values are then used to extrapolate the future free cash flows into the future. And here I've extrapolated the cash flows up to 2030 and then added the terminal value. This gives us the sum of the future free cash flows, which we have here. And to that we add the cash and cash equivalents, and then we subtract Verizon Communications' rather huge debt. And this gives us the equity value, which we then divide by the shares outstanding to get a discounted cash flow fair price of $62. This intrinsic value is higher than the 4 other models' intrinsic values, and therefore I've looked a bit further into this to see if our discounted cash flow model has given a too high intrinsic value. I have found 2 other calculations of the intrinsic value based on the future free cash flow. And the first one is from Seeking Alpha. As you can see here, they have found an equity value of the company pretty close to the one we found. And when they divide by the shares outstanding, they get an intrinsic value of $64. However, they have also added a margin of safety to add a bull and a bear case. In the bear case, they had a value of $51, and in the bull case, they get an intrinsic value of $77. Their middle value of $64 corresponds really nicely to the value we found of $62. The next valuation I found is on Simple Wall Street, and here they have also used the discounted cash flow model to calculate a fair value of the company of $180.66, which is much higher than both the current stock price and also the intrinsic value we have found. But let's go back to our spreadsheet to see if we can find the reason for this huge gap in intrinsic valuation between the models. If we look at our model now, we can see that we use a custom growth rate of 8%. But if we change this from custom to the average growth rate, we can see that our intrinsic value now changes from $62 to $220 per share. So I think the reason we get a lower intrinsic value is because we have used a custom growth rate of 8% and not the average growth rate of the future free cash flows from the last years. But let's set this back to custom to get our intrinsic value of $62. On the final page we have our summary and watch list. And here we have a summary over our 5 intrinsic valuation models and the intrinsic values we have calculated. Normally I would use Graham's original valuation for a stock with such a low growth rate as Verizon Communications. However, as I also said earlier, I want to be more cautious, so therefore I've added the option to the spreadsheet so you can choose between Graham's valuation and Graham's revised valuation. And as you can see, if we change to Graham's valuation, we get a much higher intrinsic value. So we'll just set it to Graham's revised valuation. And we then get an average intrinsic value of $51.87, which is above our current stock price. And the difference is just over 25%. Normally I would set the margin of safety to 25%, but I think we have already been quite conservative in our intrinsic valuation of Verizon Communications, so therefore I think it's okay to go down to just 20%. So when we do that, we get an acceptable buy price for Verizon Communications of $41.49, and therefore the spreadsheet will give us a buy signal. So now I'll just add Verizon Communications to our watch list, and also to our YouTube portfolio, since this intrinsic valuation gave us a buy signal for this stock. The watch list and the portfolio can be found on my Patreon page together with this intrinsic valuation tool. If you like this video, please consider to hit the like and subscribe button in order to get more content like this in the future. And until next time, have a great week.